Like, what if she doesn't have long-term care insurance and she needs it like at 86, 87? So she's been widowed for 6 years now. Like, what are the alternatives? Like, let's say she didn't plan. Is Medicaid the only way to go? Does she have to liquidate everything? Hey, John Stevenson here, the Guaranteed Retirement Guy, and I am lucky to have on my show today Jen Shell with Annuity.org. Jen, appreciate you coming on today, and we're going to learn a lot from Jen today. She's got a lot of wisdom in the annuity space, as well as long-term care. And I've been fortunate to be able to work with Annuity.org and be able to contribute to some of their materials and their articles. And it's been great working with you guys, Jen. And I know that you've got a few questions, and I figured I would start out and maybe ask a few questions of you. And I know a lot of the questions that we're going to be talking about will be directed towards women and financial planning for retirement, for long-term care. And of course, my clients, I have a lot of women that I work with, a lot of men, of course, as well. But I think this is really important also for the men to hear, especially when it comes to long-term care, because I was reading just the statistics before we got on this call that, about how long women live. And a lot of the guys are like, oh, I don't need it. I'm fine. And they don't think about their wife, or, they don't think about how their wife could use long-term care insurance and also be able to, and I was just reading some statistics here where it's talking about how a lot of times they will use twice as much as a man will ever need. I'm like, wow, that's really interesting. So I guess maybe we can kind of end with annuities, and maybe we could start with long-term care insurance. Is that okay with you?
Yeah, sure.
So so you mentioned something about women and long-term care. Like, I have so many women that I work with. Why would they want to look at this as something for their retirement as far as long-term care?
Yeah, like you mentioned, women tend to live longer than men, and that's one of the reasons why women tend to need long-term care more often, or are more likely to need those long-term care services. Services, whether that's like in-home healthcare services or in a nursing home or an assisted living facility. Women are just more likely to need those long-term care services because they live longer, and a lot of them are also, solo aging, as they say. So like they don't have a spouse around, or they don't have family living with them to take care of them. So they're more likely to need those services. And because of, the retirement gap between men and women are also likely to also tend to have less saved for retirement than men do. And so they're not only more likely to need those long-term care services, but they're also less likely to be able to afford those expenses when they're no longer working. So if you're thinking about planning for retirement as a woman, like, I think it's really important to consider long-term care insurance as like part of that retirement plan to help you plan for those costs that you might have to deal with as you get older.
Okay. Are you finding that there are a lot of women, especially who are maybe divorced or widowed, who are having problems finding long-term care because they weren't planning on being widowed or divorced?
Yeah, I mean, that unfortunately that happens all the time. And like I said, a lot of women are solo aging. They're more likely to be on their own in their later years. And so that's, at that point, it becomes sometimes necessary, like you need help to take care of just like the daily activities of living as you get older. And that's what those long-term care services are all about.
Okay. I was reading something about where it said women tend to live, they outlive their husbands by about 5 years. In fact, if they're married, they actually live longer. Even if they were divorced and widowed, it looks like they still live longer because of that. Do you think, I don't know, when I'm thinking about that difference, like if a woman's husband were to die, let's say he died at 80 years old, and she's 80, let's say, or maybe a couple years younger, and she needs long-term care. Like, what if she doesn't have long-term care insurance and she needs it like at 86, 87? So she's been widowed for 6 years now. Like, what are the alternatives? Like, let's say she didn't plan. Is Medicaid the only way to go? Does she have to liquidate everything?
Yeah, so Medicare and Medicaid can sometimes cover those costs, but they don't offer as much coverage as like a long-term care insurance policy would. And so you could end up in a situation where, you end up having to use, services that are maybe like not as ideal, like not, the most best quality, like most expensive, services that you would want. You kind of have to sort of settle for whatever you can manage to get from Medicare, Medicaid coverage. Yeah.
Will they cover? I don't think they cover assisted living, do they?
Um, I am not 100% sure on that. I thought that Medicare or Medicaid did cover some form of long-term care expenses, but maybe they just cover hospitalization, but not necessarily like assisted living.
I mean, assisted living to me is just. I mean, it's not a nursing home, and it's more like, hey, I'm older, I want some help, but I'm mostly independent, and it's almost to me like a luxury.
Yeah. Yeah, in a lot of ways it can be, unfortunately, I guess.
Do the long-term care policies that you see are a lot of them covering this? If people were to go into assisted living care, would it cover that, or would it only cover like if they go into a nursing home?
It would cover all kinds of services. So like I mentioned, like not just nursing homes, but assisted living facilities and even like home health care aides, like having someone come to your house if you want to stay in your house and have someone come by to help you out with stuff. I believe that most policies, the benefits could cover any of those services depending on what you choose. It's more like you get a certain amount of income that can be used towards those services on a regular basis. That's kind of how I understand how it's structured with the policies.
What about in-home care? Because after COVID, that seemed to be much bigger than it used to be. I mean, because people were confined at home, they didn't trust maybe some of the nursing centers. It seems like there has been some shift towards that. Do you see those long-term care policies covering any type of in-home care?
Yes, yeah, I do think there are long-term care policies that can offer coverage for, like I said, like home health care services. Certainly a lot of people, like you said, especially after the pandemic, are wanting to be able to stay home as much as they can, like continue to live in their home, but still receive, help with things. So I do believe that long-term care insurance policy would cover that.
Okay. I think about even some of the annuity policies, maybe shift gears here a little bit to annuities. There are some annuity policies out there that provide that income doubler, which I really like. So, if they're already taking income, let's say $30,000-$40,000 a year, a lot of these annuity policies will double that up to 5 years. Are you noticing a trend towards those policies?
I can't say for sure that there's been a trend towards that, but I do think that that's like an important consideration. Long-term care is like one of the reasons that people do buy annuities, because not only are you setting up guaranteed income for your lifetime or even you and your spouse's lifetime, but many annuities also, you can add on like a long-term care rider, where if you do find yourself needing those long-term care expenses as you get older, you can, activate that rider and get some extra income that goes towards those services.
Well, and I love that, because I was reading something else in this study. It says roughly 2/3 of the $6.6 billion in long-term care insurance, and this is back in 2011, they were paid to women needing care.
Yeah, that's not surprising. I mean, women stand to benefit more from not just from long-term care insurance, but also from annuities because of that longevity. Because women tend to live longer, you're going to get more out of a lifetime income stream. You're more likely to get more out of a lifetime income stream than a man of the same age because of the life expectancy. And so, and also women tend to be more risk averse than men in their investments. And so, that's the whole appeal of an annuity is, it's principal protected. It doesn't have, it has these features for, guaranteed minimum income or or long-term care benefits. So, waivers and riders and stuff like that, that you can really customize it to make, to get something that really gives you peace of mind in retirement, knowing that you have this income that you can rely on.
Yeah. Well, I have a lot of people reach out to me who are married, and they are concerned about that. They're concerned about their spouses not having the income, and especially a lot of the guys that I meet with, they're really good at what they do, as far as like they're really savvy with some of the stock picking that they do. Some of them even do day trading, and they're successful with it. Others, they've just been used to being that sole provider, and they've been used to being the sole investor, which is good, obviously while they're still alive. But then they start thinking about their spouse and thinking, well, she's my number one, and I want to make sure she's taken care of, and I don't want her to, she doesn't know how to take care of these accounts, and so I want to get an annuity so I can provide for her. And so I have people reach out to me, and they'll purchase annuities so they can have that joint payout. So if, obviously if they pass away, their spouse continues to get it, but also a lot of times their spouse is quite a bit younger, which makes that joint payout for an annuity significantly less. And so a lot of times what they'll do is they'll buy a couple of separate policies. They'll buy an annuity with a single payout for the man, so they can get as much income together alive, but then he'll buy a separate policy for her. In fact, sometimes they'll get a couple of them, because he wants to make sure that one policy will kick in. She can activate the income on maybe that second policy when he dies to bridge the gap left by Social Security, because now they're only getting one Social Security, so they got to fix that. And then if he's got a single payout or a single life payout on an annuity, he's got to fix that. And so he'll purchase a third one to cover that. And then I would say even a fourth one, because sometimes people don't qualify for long-term care. Do you see that as an issue? Like, as far as people like with their health not qualifying, and when they need it the most, when they're trying to buy a policy?
Yeah, for sure. So a lot of long-term care policies, like you said, do have you have to meet certain requirements to get approved. And so for some folks who have, long, health conditions that are maybe, increasing the likelihood that they'll have to use those long-term care services, that might cause them to not get approved for a policy, or have to pay like a really high premium for their policy. And so I have seen one way that people sort of try to circumvent that and still be able to get that long-term care coverage without having long-term care insurance, is like adding on a long-term care rider to an annuity, because those tend to have less qualifications for getting that coverage. And so the annuity, you don't have to go through a health screening or anything like that. You can just, put down the premium, and then when you need those services, activate the income, and that sort of functions, I guess, as your long-term care coverage.
Yeah, that could be very effective. And it's interesting. Like, I talk to people whenever I teach at the college, or whenever I go onto my, my channel, my YouTube channel, and I talk about annuities. Usually people don't think very much about long-term care. They don't feel like they're going to need it. But when you look at the statistics, I think it's around like 70% or more will experience some type of need for long-term care at some point.
And it's only getting more like prevalent, because as people are living longer, life expectancy is increasing. As people are living longer, the longer you live, the more likely it is that you're going to need those services. So it's something that I think probably everyone should consider as part of your retirement plan, is like whether that's something that you can add to your plan to cover yourself in that instance, because it happens a lot more often, I think, than people really realize.
Yeah. Well, and I think that especially with some of these women, they're called upon to be a caregiver even like before they need it, like for their mothers. I think about my wife's, or my mother-in-law. She's healthy right now, but I just think about later on, if there comes a point, like what if I were to pass away and my wife were need to be an in-home caregiver for her mother. I'm looking at here at some of these statistics, and it says a typical caregiver is a 46-year-old woman who spends 20 hours a week providing care to her mother. And then 1 in 6 caregivers provide 40 hours or more a week. And women are more likely to provide high levels of care. And then it says 75% of those providing home care are female, most often a daughter. And so I think about, all right, if she has to do that, it says when this happens, it says they're 2.5 times more likely to end up in poverty and 5 times more likely to depend on Social Security. And so I don't know, it's very sobering, because when we're younger, and I say younger, I mean, obviously I'm in my 40s, but I think about people in their 50s and 60s, I still consider pretty young, and usually pretty healthy for the most part. And so it's hard to think that you're ever going to need it. But then when you get closer, to your 90s, people just end up needing it more and more and more. And you know what they say, I mean, when the time for opportunity has come, the time for preparation has passed. So you've got to take I don't know. I think about, I mean, I meet with so many people that tell me, and they say, hey, John, I wish I would have known about this 10 years ago, especially with these annuity policies, because a lot of these annuities, as you know, they provide guaranteed income for life that you never outlive. And if you fund it early enough, you have an income rider that provides that benefit-based growth, sometimes 6 or 7% annually, guaranteed for the purpose of receiving income later on. These policies, that the income benefit will grow, and it's pretty substantial if you start early. Like maybe you're 50, I mean, you could have something grow till you're 60 or 65 versus turning on income right at 60 or 65. And so I just think it's important to talk about this, because people just fail to plan early enough, and they don't know what they don't know. And a lot of people, when they reach out to me, they didn't know about the opportunity for their money to grow at 6 or 7 or even 8% guaranteed for a certain amount of years for the purpose of receiving income. They just didn't know that was possible. And I love the opportunities that they have for bridging the gap, for the long-term care, and for obviously an income gap if they don't have enough from their pension or from the Social Security. I think one of the questions you want to talk about too was, how would someone determine whether an annuity is right for them? Is that can you go into a little bit more into that for me?
Yeah. So when you're thinking about whether or not an annuity is right for you, you have to think about what your priorities are, what your goals are for your retirement. Like, a lot of people don't just kind of assume that they'll want to keep, living the same sort of lifestyle that they have before retirement. But then you have to think about things like the cost of living and inflation, how that can really, reduce the purchasing power of your savings, and whether you want to keep living that same lifestyle in retirement, and how much income you're going to need to sustain that. And then thinking about what other sources you plan to rely on in retirement, like income sources, I mean, like if you have other retirement accounts like a 401k or an IRA, or if you have, if you're planning on claiming Social Security, but then, when are you planning on claiming Social Security? Because the longer you can defer benefits, the more money you can get, right? So annuities can kind of fit into that too sometimes.
How are you seeing annuities fight inflation? Like, I'm going to add into that. I'm just curious what you think about that.
Sure.
Well, like you said, like some of these annuities, you can get seeing rates as high as 6%, 7%. And that's really more competitive than other safer investment vehicles, like compared to like a CD or something. Like you're not going to get a rate like that on a CD usually. And so by putting those savings away and allowing them to accumulate at that guaranteed rate for a couple years, you really are kind of offsetting how much inflation goes on in that intervening years. You're trying to hopefully outpace inflation a little bit, or at least keep up with it, so that, as opposed to just sitting it in a CD or something where you're only earning like 3 or 4%, you can get a lot more for your savings if you put it into an annuity like that.
Well, and some of these annuities will provide, once you actually activate the income, as you know, you can actually attach a COLA, a rider, something where you can have that increase. So you've already had the increases up to that point in growth, but then you can do it further as far as the payments. Another option that I like that clients will do is they'll come to me and they'll say, all right, well, I want like, I don't know, let's say they're getting 30,000 a year right now from Social Security. They got another 30,000 from a pension, but they still want another 20 to 30 grand in extra income. And so they'll purchase an annuity that's big enough to give them that income right now. And so now their total income between all three of those sources is like, let's say $90,000. 30,000 Social Security, 30,000 pension, and then the 30,000 from the annuity contract. So they might take a portion of their savings and invest it for that income right now, but then for inflation, because they're like, all right, well, I mean, you've seen inflation the last few years, it's crazy. But what they'll do is they will purchase an annuity, maybe 2 or 3 more annuities, and they'll activate incomes on those later on because you've got the income benefit base growing every single year guaranteed. And so they might put the same amount, like let's say 400 grand gives them 30,000 a year in income. That same $400,000 will give them 50,000 in income if they wait like 5 years. And then they could put another 400 grand into something that'll give them like 70 or 80,000 in income. And they could just keep on activating those second and third annuities to way more than beat inflation, in my opinion. I love stacking, and so I always, whenever we talk about inflation, I love that strategy.
Stacking or laddering. Sometimes people call it like laddering an annuity or multiple annuities. Yeah, that can be really effective.
All right, well, that's all I've got today. I mean, what is there anything that we haven't covered that you wanted to go over real quick before we close?
No, I don't think so. I think that was everything.
All right, well, Jen, I appreciate you coming onto the show today. Jen, I enjoy working with you and your colleagues over at Annuity.org, and so grateful for our partnership. And I'm grateful that you were to take some time out of your day today to chat and also share so much value to a lot of the people that I work with and that I help with their retirement. I know that they'll be extremely grateful to you as well. So thank you so much.
Yeah, my pleasure. Thank you so much for having me.
Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.